Alrighty. This is a little bit better than making a video. At least I give somebody a chance to ask a question. That's a good thing. Sorry about being a couple hours early this morning. I have to run out. I got a message last night about something, and I must run to northern New Jersey. So, at first I thought let's do a video, and then I thought, nah, if I can get on earlier, I'll get on earlier, and that's what we're doing. It's very rare, but it has been of late. We've tried experimenting on trying to be a little bit earlier, and it hasn't really worked very well. But this time, it's just I have to go out the door at the time I'm going to be normally doing my webinar, so it's a lot easier to just do it an early webinar, and Dukascopy's been kind enough to let that happen, and that's really cool. All right, let's see what's going on here this morning. You guys see the dollar index on J4X. It's showing its strength still. You know, it's trying. You know, you can see it's trying. The green has gotten really teeny right there, teeny, very small. You see the green lines have broken down. We're seeing some pressure. And then when we look at Chicago Quant, you can see right here we're playing with a daily buy number at the moment. Again, that weekly, let's see if we can do this. Go like this right here. You can see the weekly right here has been in a buy for a while, and it doesn't seem to be letting go. You know, you get these, little moves down a little bit, like this one here. Oop, right there, you saw that. You know, not sure why it says owner, but you can see that there. You know, it does a little correcting. In this case here, it was pretty good. It went on for, there's 5 days, there's 6 days. Yesterday gave us a volatility signal, and now it's breaking through the zero line here. And we just, I guess one of the things that surprised me this morning as reading, I was reading, and there was a couple of people were saying, they need to do something about the dollar. I know a lot of you outside the United States must be wondering, what's wrong with these Americans? They don't understand their currency is so strong. But they're saying that they're looking for a stability. They're looking at it and they're saying, we need to do some type of stable thing. Put commodities to the oil, or I'm sorry, commodities to the dollar. Like a basket of commodities like oil and gold and so forth, and just make it an index, not necessarily deliverable, but just lock it to it. In other words, and that's an interesting point. Just to make it a fixed situation. And that would be very positive, really. That would be positive in some way. Just locking commodities to currencies in general, and so that's something that's being discussed by a few people that I trust that have common sense in many different forms, and that's where we're at. And that's kind of, like I said, it's kind of surprising, because everybody over here does realize on some level or so that the dollar is very strong, and it's flying along at some of its strongest points, and that's I guess for some it's let's see if I hear my voice. Yeah, there you go. I can hear my voice. So that's a unique thing. I know this must sound strange all the time when I mention the fact that Americans think our dollar is weak. Anybody outside the United States looking at the currency must be thinking, what is wrong with those Americans? They don't know how powerful their currency is. We do. We mean buying here. In other words, right now with the inflation, our dollar is not strong, and we're very disappointed about that. I guess you could say in some ways we want it all. We want a good currency, but not a super, super, super giant strong one. We want one that's stable, that is consistent, not look like the Turkish lira going up and down. Matter of fact, I saw something yesterday. Again, another spike in the Turkish lira. So something's going on over there in the Turkish lira, but we'll get to that when we get there. But yeah, that's where we're at the moment. We're at this point now in the United States where we're looking for some type of stability, something consistent. All right, let's jump over to the euro. And there's the euro right there. There we go. You can see it's just breaking down. It went into the sell there yesterday. We're seeing that pressure, and that's a little bit surprising. Someone also, the person who mentioned this in the financial side who I trust said we don't want the pound to become the ounce. A pound, ounce, a kilo is it 2.54 kilos to a, no, what's it the other way around? 2.54 pounds to a kilo. And so then you're looking at in the United States we do pounds and ounces. So we're 16, was it 26 ounces to a pound. So we're just, I thought that was a good joke. Anyway, it seemed like a good joke at the time. From the euro, you can see the euro here, the weekly is not letting go. It's like the same way as we were looking at on the dollar index. It's been in a slow, steady burn. It tries to act like it's getting going, and then it stalls out. And I think we've seen that same thing over on the British pound, which at the beginning of this week, all of them were playing around with their weeklies. And now they've stalled out, there's the dollar index there on a daily basis. We were looking at it on a weekly basis. And you can see here, the green line is trying to turn up too there, and it's trying to make its move. Now let's jump over to the euro. There it is. You can see that right there. It's rolling over, just like we're doing on Chicago Quant there. You can see that pressure on it. So from there, we're going to slide over to the British pound. Right there. Pound's doing the same thing, and it has fallen, as you can see here. It was flirting at the beginning of this week. It was flirting with that weekly buy. I was excited. I thought, okay, it's coming. It's starting to happen. We're starting to see, a little turn here, but not enough yet. Not enough yet. Here we come to the end of the week. It's Friday, and what do we see? We see it back underneath. Now, that doesn't stop it next week from trying to climb up again into the weekly buy on a Monday, Tuesday. And then we'll watch and see how well it holds up going into the rest of the week. But that is the pressure we're seeing at this point in time. All right. So from there, let's see, where do we go from there? We jump over to the Swiss. And there's the Swiss right there. And again, we're a tad surprised and disappointed that it's trying to climb into the daily buy. And again, another one of those products that's been staying. It tried, even with this big sell-off, it tried to get into the weekly sell and failed, and jumped right back into the daily buy after 5 or 6 days. And it was a slow, steady burn. I say that's how I describe that. Where it's barely changing each day, and then it gets a little bit firmer, and the highs become higher highs, and the lows become higher lows, and it's stalling out, and then boom, it takes off. And it has that explosive characteristic that will do that to it, which is kind of unique in the sense that it's consistent. The uniqueness is it's consistent. We see those type of actions a lot, where it gets into that. Really, there's an old saying, actually. I'm going to deviate a little bit on the trading floor. The old trading floors, they used to say, never short a dull market. In other words, something that's slow and quiet. Don't short those. You short those, somehow or another, they find a way to burn you. And there it is right there. After sliding back into the daily buy right there, you can see it swinging around, still trying to climb each day. And then all of a sudden the shorts capitulate and they buy. And you can see just those 3 days, look at the strength in it like that. And so shorting a dull market, in other words, playing the downside on a dull market, can be very, very, very dangerous. Alrighty. Now from there, we go over to the Turkish lira itself and see some of the wild and woolly twists and turns. So let's just go to dollar Turkish lira to start off with right there. Now that's flat. So you've seen some of these. This is starting to look very strange in the sense of right there. I mean, it's basically getting to a point where it's acting as if it's become illiquid, which is kind of odd because you don't really think of those products as illiquid. But there's it just is surprising. I guess economic policies have really, really, just altered this particular country's currency. I mean, we've seen this thing now basically trading from $1, not $1, one full point to 19 points over the last 11 or 12 years with President Aragon. That is an astonishing, wild ride for a currency. Just an astonishing, wild ride. Now let's take a look at it through the euro, Turkish lira. Right there. Yeah, you can see that spiky thing going on right there. Let's see what it does there. I saw that last night as I was doing the numbers. I was like, what is that all about? And that's what I saw. Pressure to go back into the sell. That's what they did last night. They closed in the sell there. And today, it's just kind of hanging. But that is some wild swinging action there the last 4 days. That is wild. And it actually, look at it, touched the 19. Someone is desperate to get inventory. That's how we describe it, really. Someone is desperate to get inventory. They need to buy it or sell it because it's obvious that it's swinging incredibly, in an incredible way that is starting to become, I would think they would become concerned. I would think that the country and the government would be a little bit more concerned about it. I don't see anything in the news. And if anybody out there sees anything, I'd love to hear. I was so impressed with the put that they had created back in December, giving puts out to long buyers. And now here we are, we're at the highest points ever in this product. And I'm totally confused because I thought they were giving free puts out, which was creating great stability for a bunch of months. And then the stability has disappeared altogether. Maybe they just stopped. Maybe they, I thought the logic was when they started giving out free put options to longs in the Turkish lira, I thought, well, the worst they have to do is just raise their taxes a little bit. In other words, that the government will pay for it. It makes it a lot cheaper than robbing the sovereign funds and taking cash and borrowing money and all that other stuff, And if you have to charge a little tax just to keep your currency stable, that's not a bad thing. But it must be the policies. And we're not seeing the policies. No one's talking about the policies. And that's probably what the problem really is coming down to, is that we're not seeing the strange policies that are putting a lot of pressure on that currency on a given day now. Because, look at these moves here. These are real. Someone had to get rid of inventory, and there was no buyers. And this one here, the next day, someone needed to get long, and there was no inventory, and it spiked up for them to get the inventory. So that means that there's pressure that people, companies, so forth and so on, need access to that currency, and they're going to get it no matter what in the end. And that's what these big spiky things are starting to do. And you can see them here, and you can't see them there. Let's do this. You see them here too, and it's the width. Notice how tight the currency was, and now look how wide the currency is getting from all that action. All right, from there we jump over to the Canadian. See what the Canadian is up to this morning. There's CAD, and you can see here, we got a lot of products that have given us volatility days yesterday, or the day before. It's a lot of volatility. You're seeing, red and greens on the day before, or 2 days before, and you can see in this case here, the Canadian is down just a little bit today, but overall, they've tried to turn this again, and we're seeing, at the same time, we see the stories of OPEC, and we see the stories of, the concern. So we're a little, like it must be some type of inflation factor. There must be some type of economic factor kicking in here, where we're seeing the Canadian have its issues. Look at it; it's kind of it's building some type of position up there or something. You can see a position is being accumulated, or it's it's trying to build a top or doing something in that range. But without a doubt, it's very firm up there. Notice it gets sold down, it comes back up, and we're watching, world oil. Let's put world oil up on J4X here. Right there. There's world oil. We're trading at 89, so you can see how oil has been climbing for a bunch of days here now, coming off of the 70s, and here we are flirting with 90. And that says a lot. And what we're seeing in the Canadian is, instead of this, the Canadian here started the rollover. What is that? That's 3, that's 6, that's 8 days ago. And then you go back right to this, like, topping out here. So that's 3, that's 6, that's 8, 9, 10. So you can see here, it started to do some type of down movement and then stalled. And they run it back up. Try to do down movement again to adjust to the rising price of oil. Usually Canadian dollar gets strength against the American dollar that way. It heads down. It's stronger when it's going down against the American dollar. But in this case here, it's turned into a plateau. It's turned into a plateau. Cowboy!
Hey.
I had to do my webinar. I'm doing my webinar now because I got to go with Joe up to his last event.
Oh, are you on your webinar now?
Yeah, I'm doing it an hour early. So, 2 hours early, actually.
You're getting ready to do it.
No, I'm on there now. Yakking away. Say hello, world.
Hello, world. Goodbye, world.
I'll talk to you on the ride.
Be blessed, world.
That's it. Amen. All right. So, and the end result is that you can see here this action we're seeing in the Canadian is somewhat surprising. And, we're seeing this type of action everywhere. The dollar has just become so dominant. Interest rates, let's put it this way, people want return on their money. That's that joke, that poor joke I'm always saying, in America, we like to buy low, sell high. And then I like to say that the markets like to, in Europe and around the world, a lot of times they like to buy low and sell low. But in this case here, they've gotten them all into the plus, which is a nice thing. But to go on for a whole decade of minus in Europe has been very bad. I think it's been, it hurts the average person. It's not a good thing. So then when we shift back over to here to look at the oil market, here's a spot contract right there. You can see, we're playing in the high today is 89.37. We're trading at 89.18. Now there's 19s are trading. 18s are offered. 17s are bid for. It's kind of firm. You can see that slow, steady grind up. And we don't see that with the Canadian. The Canadian is just sideways, which says a lot. To me, it does. It means that there's something else out there that's influencing it more than the normal things. And that's always like a red light. It's a warning. It says something to me. It says, ooh, pay attention. Don't be so brave to do anything until you see good numbers. All right, and then from there, we slide down to the South African Rand right there, the ZAR. And you can see that's lifting up. And at the same time, we see gold doing the same thing also. And there's gold. And gold was down a little bit yesterday. And it's down a little bit today, but nothing major. And you can see we're in the daily buy. And the weekly is right on the edge. It just is fighting to try to get into the plus zone. And at the same time, we're seeing this, I guess you could say it's like, I think it's digesting from this move. It's moved from the 1630-ish area all the way up to the 1730-ish area. It's done like $100 over a 5 or 6 day period. So, maybe it's trying to digest and saying, okay, do we take profits or do we go higher? And I think it wants to go higher. That's what I think. And I think it's mainly because we've been seeing the interest rates kind of find a way to pare itself back. And we'll go through the metals complex in a few minutes after we're done this here. But it has been, the market we expected is the market we got, which was kind of nice. You can see lower lows here, and now it's trying to take out, like this high, and then it'll be like this high, and then it'll be this high. Get it back into the 18s. All right, back to the currencies, and let's reverse it. Yeah, let's do this. So here's the South African rand, and you can see the rand is moving up. When we have gold, let's put gold up on J4X. When we have gold being very firm, we should be seeing this thing is doing the same exact thing as the Canadian, which again is like a flashing light. It's a warning to us. Something is bothering these markets more than just the basic economics. And we know how, we've heard Janos talk about it. We've heard a lot of people talk about it, how the fundamentals are just not, working. They just don't work. We're seeing a few things, like inflation isn't a fundamental of, understanding markets. But we're not really seeing the normal pattern. So something's going on here. And then I guess you could say, when we go back and we think about the Turkish lira with those wild spikes, it's telling us that money is pulling back right now. They're standing to the side. And that's never a good thing. When money starts to stand to the side and is waiting because there's uncertainty scares markets. And that's exactly what I think we're seeing here, is that uncertainty. And that could be, I thought about that just now in my head. And that could be part of the reason why we're seeing those strange spikes in the Turkish lira. Buyers and sellers need the product, and there's nobody, and money is standing to the side. And it's not necessarily Turkey they're standing to the side. They're standing to the side for the rest of the markets around the world. And that's why we're seeing the South African rand not perform when gold is performing. Why the Canadian dollar is not performing well when the oil market is rallying and rising. And that's the that's like a what's the word I'm looking for? But that's like an epiphany. I think I've gotten an idea there. Something's going on, and that's what these two symbols are representing. The South African rand, and I know it's an odd thing to say, okay, the market is resting on these two particular products. I don't think they're resting on it. I think we have something to measure them against, not just the dollar. We have commodities. We can measure these two particular products, and because of that, like when we go back to the euro in some ways has done the same thing. It's climbed up and stalled. Same thing with the cable. The cable climbed up and is starting to stall. And so, it may mean more than anything else, it may mean money is confused. And what do I mean by money is confused? It means that the funds, the investment funds, the mutual funds, the hedge funds, they're not sure what to do. And so the smartest thing they can do is stand to the side. And now we're into October. A lot of these funds like to end their year early. So what they do is they slowly start to stabilize their funds so that the gains they had or the losses that they had start to move away. In other words, they don't allow them to get out of hand anymore. And you got to imagine all of them were down pretty well for the year. So, what they're going to be telling their investors is basically, well, we outperformed the market. The S&P is down 25%, and we're only down 23%. That's usually that industry's nature is to talk about the benchmark. And that's why we look for, I guess you could call them benchmarks. In other words, we're looking for something that's analogous or something that you can look at, like when we look at Canadian against oil, or when we look at the South African rand against gold. That's a benchmark. That's something that you can try to measure. And what's kind of interesting is the fact that those two, gold and oil, which are very powerful entities in our economy, They're giving us a warning sign. They're telling us something is not working right. That's what it's telling us, that the buyers and sellers are disappearing, and they're standing to the side. And in the Turkish lira, the perfect example, here it is. It's the largest country. I guess you can call it the largest country. I'm not sure who's bigger, Russia or Turkey. Well, and the end result is that you have Turkey on the border. For years it was trying to become part of the European Union. It had favors. It's part of NATO, and you can see that currency is jagged edged. So in other words, like saber-toothed. In other words, it's rocketing back and forth. So it tells us that money is disappearing somehow. In other words, they're not willing to step up and trade. And so when someone comes in to buy, here I'll just point it out one more time. We'll put the dollar Turkish lira on there because that's a great example. That's what that's all about. That's what these things are representing. They're representing the fact that it's illiquidity. In other words, there's no liquidity. So when someone comes in to buy, they don't have anybody to sell it to them. So they have to keep on buying until they get filled. If they need X amount, they keep on buying until they finally get the price they want. And that's what that crazy spike's all about. And then you see where it closes, like right back to there again. And vice versa. Someone came in here the day before and needed to sell it. So they needed to sell Turkish lira and buy dollars. And until they were done, they were going to keep on doing it. Look at it. Drove it down into the, 1721 area, 22 area. And we're seeing that on all the charts. This is not the only chart that we see it. And then we're seeing it also on the Euro Turkish lira. We're seeing the same distortions. And we're seeing it on the exchange traded charts. So it's like, whoa, something. I'm glad I've said this out loud and had a chance to really think about it. What we're really starting to see is we're seeing a liquidity problem. That's what we're seeing. Now, it's not that predominant in euros and British pounds and so forth, or Canadians, but it obviously is more dominant in weaker things like this. All right. So from there, let's jump back into the currencies, and we left off with Turkish lira. So now we've done Canadian, so we're going and ZAR. So now what we'll do is we'll go take a look at the yen. And there's the yen. The yen's not running away from any stable thing, but notice this is looking like like literally a reverse head and shoulders, like as if it wants to go higher again. And we're looking at like 27, 28-year highs now in the yen against the dollar. Let's just take a look at the Nikkei. The Nikkei seemed to yawn it off, which is pretty cool. There's the Nikkei right there. Nikkei has been, last couple of days, it's been stalled out like the way the other indices are. The same thing's going on with the S&P, stalled out. So money has stopped, and I guess that could be literally the title of this webinar, is that money has stepped to the sidelines. Investors are stepping to the sidelines. That is what I'm seeing, is that money and investors and funds are starting to step to the side, and they're not comfortable in participating. Boy, I'm so glad that I didn't do a video and I'm doing a live webinar, because at least I feel that when I'm live, I feel like I'm really thinking aloud. Whereas on a video, I know it still runs straight, but a video is just a video in my head. But that is, I think that's what we're coming to the conclusion of. Money is standing to the side. Investors are standing to the side. And I think that's something to be concerned about. I mean, it's usually, when you see that, that usually means that people are concerned. There's uncertainty. And that's not a good thing. All right, I'm putting that in as a title too. I like that. stalled? How about stalled instead of stand? Yeah, I think that's going to be the title. I like that. Investors and money stalled. All right. Let's see. From there, we go over to the Mexican peso. We go south to the border and see what the Mexican peso is doing. That has been kind of, like the Canadian, it has been, very stable. You can see here, it's just kind of cruising along. We try to get. There's another one. There's got 2 days now of volatility signals. So, volatility signals can come when no one cares, and they can come when everybody cares. In other words, something's coming, building up. So maybe we're going to see some big action in the marketplace here. Maybe that's what they're all trying to tell us, is that money's standing to the side, and they're waiting for something. Let's see, what is this? We're in the beginning of the months, right? So what's today's date? So unemployment comes out today, right? I guess that's what it is. No, unemployment was last week. So next week it'll be GDP. And it was, as we said yesterday in the webinar, when Mr. Biden became president, was sworn in January of 2021, the economy was running at 6.2% GDP plus. And now for the third quarter in a row, we are minus. So Mr. Biden's policies are really not very accommodating. Let's put it that way. Let's put the Mexican peso up there. Right there. And you can see Mexican peso is trying to turn back up again. You see it right here on Chicago Quant the same way. Both of them. And you see that strength there. And that weekly. The weekly's even looking, as I would call it, dogged. It's looking tired. And it's not really doing anything. It's just sitting there. We've seen it try to get into the weekly sell. It doesn't do a very good job at that. And for the last 4 weeks, it just keeps on stalling out at a very low range. It just doesn't seem to want to get going. I mean, it does seem to be stalled out. Probably the most interesting thing out of it all is that we're starting to, now that we're identifying this morning, it's becoming very clear. A lot of things are really stalled. They don't know how to get moving along because money is standing to the side, and that's something interesting. That's usually that can be a big concern, because that means that the markets are going to want to break out over the next 3 or 4 days. Actually, this would be the time to buy a straddle in some stock indices or currencies or something like that. In other words, they're going to break the range, the beta and the gamma. You buy the gamma, in other words, you get in a position where you make money when it goes up X amount, and then if it goes down X amount, you make money. A straddle. And this is basically starting to look like straddle territory. It's starting to look like something's going to explode in this thing. I think the markets, I guess one of the things I've noticed is that they're starting to anticipate the idea that the interest rates are probably going to be stalled out a little bit here. As I finish off the last of my coffee. All right, that's it for the currencies. So let's do this. Let's go over to the interest rates. Normally we go to gold or silver or something like that, but let's just take a look at them. See, they're doing the same thing there too. It's getting really tight. Everything is tightening up. Everywhere we look, it's getting tight. And you can see it's sliding into the sell. It's been in that weekly sell for 3, 4, 5, 6, 7. This is the 8th week in a weekly sell. But it's starting to become apparent that same thing. There's that was the 30-year up there now. There's the 10-year. Same thing. It's kind of stalling out. Money's not sure where to go at this point. The Federal Reserve is, let's see what the bonds look like here on J4X. I know they have a 30-year. There it is right there. Yeah, there's the 30-year right there. So I know that money is becoming confused. I knew that much, but it's really starting to scream in our face these last 48 hours. Especially, as I said, those three products we're watching: the Turkish lira, the gold against the South African rand, and oil and Canadian dollar. Those three are really screaming at us, telling us something's going on. And so that is definitely something that we need to keep track of. We need to just be coherent to the fact, because one thing is very sure, and that is we don't want to you don't want to have a position on and get stopped out and then find you had the right position on, because it's going to look the markets could get the way the South African rand is, not South African rand. It could get the way of the Turkish lira, that swinging stuff, the wild action here. That could start to happen more, in a positive way for the longs, possibly, or the longs capitulate. I don't, it's hard to believe they get paid to be long. They don't really get paid to be short, so it's really hard to believe that they're going to sell the market down any more than they have already. Now, earnings and dividends seem to be holding up pretty well, so that's usually the fuel to a healthy market, even with Mr. Biden's going into a third quarter now in a minus. That's wild. 3 quarters. He's been physically president for 7 quarters, so 4 for, and then I guess October is the beginning of the 7th quarter. No, the 8th quarter. It's the beginning of the 8th quarter. So he's been president for 7 quarters, and 3 of them are minus. They're not just low; they're minus. Wow, talk about failing the test. Ooh, 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 ooh. All right. From there, let's jump over into the commodity universe. And we'll do the metals. You can see here, as we've talked about, there's the gold. Let's take a look at silver. Silver doing the same thing. It's kind of trapped in that, I guess, topping pattern or sideways pattern. I guess more it's sideways pattern. You can see the weekly there is very happy. It's very strong. Let's take a look at it over on J4X. There it is. And it's holding up pretty well there. Let's see what the weekly looks like. There's the weekly right there on J4X. Yeah, it's spiking up. It's joining in with the weekly buy of last week on our work. So, I think they're, when you think about the metals complex, wouldn't it be logical to close out your short against the silver gold pairs trade? I don't know what the historical chart is, but without a doubt, we must have been seeing some incredibly wide range there, and maybe that's why we're seeing silver first showing a lot of strength. We see platinum doing it. We see copper doing it. There's copper. Copper's trying to break its way into the buy. Let's see what copper looks like over on J4X. And now we know, we talk about it a lot here. Copper is kind of like if you're going to put something against copper, I guess it would be the Chinese economy. That would be the best thing to look at. And there's the weekly. It's trying to lift up too right there. And that is, I guess it's like the only thing I can really relate to when I look at copper. I just think of China, because China uses it like trading internally, like gold. And then platinum. Platinum, I'm sure, is cleanly holding on to the weekly buy with no problem right there. You can see that it's inching its way to that. They're not going to nail it down, that's for sure. So I'm going to get rid of that and just say file, save. And then you can see platinum's doing the same action after a nice spiking move from the 840 area. It has found a way of resting up in the 940 area. Right now it's trading at 29, but it's going to be in a weekly buy. And so we've been watching for that. That's probably going to be a really good, clear signal that there's strength out there. There definitely is strength out there. So let's see what else we got. And you know what? Stock markets today are not really moving whatsoever either. They're all... Let's put the stock markets up there. Open workspace. Right there. And there's the four stock indices. As you can see, the S&P 500 is only down 4 points. The Tech 100 down 45 points, and the Dow Jones Industrial Average up 19 points. So, I mean, that's a real mixed market. And you can see Bitcoin minus $50. So it was, this morning, let's just go back to Bitcoin. I was talking with Wilco out there this morning, one of the webinar people from years past in Dukascopy. And let's see, what do I want to put up there? There it is right there, Bitcoin. And Bitcoin is flirting with the daily sell, but also at the same time, very close of closing in the weekly buy. So, we've talked about where it does seem that the cryptos are almost a leader now to the stock indices. It's a whole new form of equity now, the crypto. It's a combination of, it acts like a currency, but it's not. But it has the ability to act like it. It has the ability to act like it's a commodity, but it's not. It has an ability to act like an equity, but it's... I guess you could say it is an equity. That's what it really is in the end result. It's an equity. It's a international way of transferring money, and at the same time, and at different currencies. So, it's a whole new equity. It's almost like buy a stock and be a bank at the same time. That's what it really comes down to. You're routing around the local bank and the clearing system. You're routing around the Federal Reserve. You're routing in many ways around the government itself. And so it's a whole new equity. It's a international equity. That's what it is. It represents international abilities. That's what it really comes down to. It's the international abilities that it represents, which is very fascinating. All right. From there, I thought we'd just talk about that real quick, the cryptos, because of that. It's acting fairly well. Be interesting to see if it closes in the buy tonight. Unless there's some economic news coming out today, and I'd imagine it is. It's a Friday. It's the second Friday of the month. Usually we get some type of economic news out of things like that, so we'll have to keep an eye on that. Okay. So, as I said, the stock indices are all mixed and going nowhere this morning. It's like a classic. It's very clear. Money is standing to the side. I think that's my new mantra for the day. All right. From there, we go over to the energy sector, which is, obviously a major player. You can see Spot. Spot is now trading at its highs of the day of 89.48. 49 is offered, and 52 is the high of the day. And you can see the weekly is trying to get into the buy. Very close. The daily's been in a buy for 8 days now. This is the 8th day in a buy. It's come from the lows of 76.31, 76.25 no less, right there, to a high of right now of 89.52. That's a $13 move. And I know they have a, classic America, they have a name for OPEC now. It's OPEC Plus. OPEC Plus. And so that's where we're really, that's the adventure of it all, which is kind of funny. OPEC Plus. It's amazing that they come up with these names like that. And that's where we are with it. OPEC Plus. Russia and any other oil producer out there that wants to probably, I don't know if Iran is backing off. That's hard to believe if they are. but it's OPEC plus at this point. We should be part of it. The United States has the ability to produce at least another 3 million barrels. We could compensate for that 2 million barrel in a heartbeat. But they don't. And then let's put, I bet North Sea now is, if this is almost, North Sea must be like 93, 94 at this point. So let's see where North Sea oil Brent is trading. 95. They're definitely stepping up, and they are buying. There is no doubt about that. They are stepping up, and they are buying. Let's see. From there, we're going to drift over to the back month. We'll take a look at the back month. So we're basically at 80. What is it? Let's cancel that. 89, is it? We're at 89? Yeah, 89.52 is the high. Let's see what the high is in the back month of January. And the high there is 87.47. So it's now $2 wide. Yesterday it was like $1.74. Day before that was like $1.35. So the back months are not expanding. They call that contango. And so it's not as expanding as much as the front month. So obviously the demand is up front compared to the past. The future, not the past, but in the future. So money is looking at oil right now and saying, well, January oil could be much lower. We don't, again, we are on the verge. We are on the verge at this point. We're looking for October 8th is the election. And so next Tuesday, we're going to be sliding into, I guess, a 4-week target at this point. We're going to be 4 weeks off from the election. And all signs say that we're going to change power in Washington. Now the question is how much power is going to change. And that's what we're waiting to see, really. But at this point in time, and you can see here the back month also, minus 0.07. See, it's just underneath the weekly. Just underneath the weekly. They don't really want to take off that much because in 6 weeks, the markets may be staring at the possibility of us drilling and getting our oil production back online. The markets may be, that's why probably markets are standing to the side now. They're not really sure what to do. It's becoming obvious that something is going to change, and it's going to change in a big way. And that's what my money would stand to the side. And they would basically say to their investors, we don't know what's going to go on, but one thing is for sure, we're not going to get caught. I love this. I usually say it. We're not going to get caught flat-footed. They're not going to get caught flat-footed. They're going to get, in other words, they don't want to be surprised. So instead, they'll tell them that they're going to hedge themselves or protect themselves, and at the same time, they're not going to get caught flat-footed, which means that they're prepared for any action that's coming. Do you trust that? I don't, but that's part of the song they sing to the investors. That is the song they sing. It's a crazy one. I shake my head at it. I've heard it too many times over the decades, and then you see this enormous bulk of funds having issues. Not making money, barely competing with their benchmark, which is normally like the S&P 500. I'm sipping my water. You know how I say that, we're watching the benchmarks of like gold. We look at the South African Rand. We're looking at the benchmark of oil. We're watching the action in Canadian. And in this case, the benchmark for hedge funds and mutual funds and retirement funds is normally the S&P 500. Unless they're deeply invested in things like the tech universe. And that's usually a strong thing there. Then they're kind of benchmarked to the Tech 100. All right, let's take a look at natural gas. Right there's nat gas. And you can see it's trying to roll back over again because maybe we are going to, and look at this flat line down here when we tighten this up. It's come down from the $10 area. That was $10 back in August. late August going into September, it was flirting in the $9.50, $10 area. Now we are flirting with the $6.50, $7 area. And when we look at that, I'll show it to you on J4X too. There's a natural gas that we're looking at there on J4X. I mean on Chicago Quant. And at the same time, there is that gas company that we follow out of Spain. And it has fallen from like the $29, $30 area down to the $23.50, $24 area. There it is, $23.84 as we speak. So it shows us markets are standing to the side. Now the waiting game begins. 3.5 weeks. It's bad enough that it felt like the waiting game had begun in March. I mean, I've never seen a market so adhered to an election that was 7 months away. But that's what happened. So it was like March, April, May, June, July, August, September, October, and November is 9 months away. So it's like 8.5 months we've been staring at this thing. It's like, oh my God. I remember in February they talked about it. It was like, are you kidding me? Can't we just get through the summer? Normally, markets don't pay attention to politics until after the summer. In this case here, it has been a drumbeat every day. So poor Mr. Biden has been trapped in this drumbeat of, we don't trust what you're doing, we don't like what you're doing. You can't imagine how many signs I see about Biden. People put signs up and flags about they dislike him. You know, it's going to be one of the more unique elections we've ever seen because of all this mess. But anyway, there's the Nat Gas, and on J4X, that is the Spanish oil company, the natural gas oil company. And you can see it there. It's been riding down. And we're trying to, I guess they're trying to take out this range here. Be nice to see it down in the 21s. I don't know what Nat Gas is trading for over in Europe, but I would imagine it's much lower than what it was a few months ago, even with it being the winter. And you see the headlines. I mean, I see it this morning. One of them was it Poland? People are burning trash. They're using anything they can to burn to generate heat. And then Germany, they put a picture of a gas stove in a house and said that they're not sure that they'll have enough natural gas for the winter. So, you know, the United States promised that they were going to keep on exporting natural gas, but they shut the pipelines down to do it. So we're kind of like a little confused what they're talking about. So I guess, you know, the Democrats have that habit of saying things but not doing them, which is kind of weird in its own right. All right, traders, where else do we go from here? I guess that's about it. We can take a look at the stock indices, but the stock indices are basically doing the same exact thing there. There's the S&P. It's up just a teeny bit. Let's just take a look at it on the intraday. You can see it's down about 2 points. That's it. And the Dow Jones Industrial Average right there, up 33 points. Right there. You know, just again, that flat line thing is going on. They're not getting it. You know, it's not happening. And then here's the Tech 100. Tech 100 was down last we look about 40 some odd points. You see it there. It's down 40 points right there. And Bitcoin down $50. So they are flatlining. In other words, they're quiet. They do not have that gusto or energy that you would expect out of a market that's excited and anticipating some good action in the future. And that is kind of curious in its own right. And that's really where we're at the moment. You know, markets are starting to stand to the side, and I'm starting to see it. There's no doubt about that. All right, I think we're done. This is Doc from North America. We had to jump off early. We will be normal time on Monday because I will not have any more of these issues anymore. So, to deal with. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart weekend, and we will catch you all Monday, same normal time. But at least we didn't do it as a video. We did give a chance if anybody accidentally had tuned in to to basically get a chance to ask questions and do things. And that's a good thing. That is a good thing. Ta-ta for now.